Hello and welcome to Free Lunch here at Zacks. I'm your host, Ben Rains. It's market deja vu on Thursday. The S&P 500 tumbled 7% right after the opening bell, which triggered a 15-minute halt in trading for the second time this week. The index also fell into bear market territory, down 20% from its recent highs. This came only one day after the Dow Jones Industrial Average ended its 11-year bull run after the World Health Organization declared the coronavirus a pandemic. The Dow was down over 8% as of 11:30 a.m. Thursday morning, while the S&P 500 was down 7.4%, with the Nasdaq down 7%. Meanwhile, the CBOE Volatility Index, which is a closely watched measure of turbulence, hit its highest level since December of 2008. Today's drop came after President Trump addressed the nation live on TV Wednesday night and announced a 30-day ban on some travel from Europe into the U.S., which is set to begin Friday night. The travel restrictions exclude the UK, as well as U.S. citizens and green card holders, and their spouses and children. On top of that, the State Department advised U.S. citizens against all travel abroad, even to countries not yet experiencing an outbreak. Trump also announced that the U.S. government is taking emergency action to, quote, ensure that working Americans impacted by the virus can stay at home without fear of financial hardship. He said any aid would be targeted to workers who are sick, quarantined, or caring for others. Mr. Trump also said he would tell the IRS to push back the April 15th tax payment deadline for certain individuals and businesses. On top of that, the Small Business Administration will offer low interest loans to help small businesses overcome temporary economic disruptions, which is effective immediately. Clearly, more and more people are worried about preventing the spread of the coronavirus. The NBA abruptly suspended the season Wednesday night after a player tested positive for the coronavirus. Meanwhile, the NCAA said that March Madness will be played with no fans. On top of that, many colleges around the country have shifted to online classes as major events continue to be canceled or postponed. Dow Inc. and Boeing were the Dow's biggest losers through morning trading Thursday, both down over 12%. American Express, IBM, and others weren't far behind. On top of that, United Airlines fell 13%, while Norwegian Cruises and Royal Caribbean were down 20%. American and Delta stock also fell as well, along with most of the market. Looking ahead, Adobe, Oracle, and Broadcom all report their results after the closing bell Thursday and might help paint a better picture of what to expect in Q1 and beyond. And that does it for the news portion of Free Lunch, but make sure to stick around for today's new Zacks Rank #1 strong buy stock.
For today's tech tip, we will be answering one of our most common customer support questions. How does one sign in to their account on Zacks.com? On the Zacks.com homepage, you will find the Sign In button in the top right corner. Fill in the email address associated with the account in the top bar and type your password below. You may also check the Keep Me Signed In tab, which will keep your account logged in for up to an hour of inactivity. From there, click Sign In, and you are good to go. Have a question about using Zacks.com? Send us an email, and we might answer it next.
Hello and welcome back to Free Lunch. Today we're breaking down why Intel is a Zacks Rank #1 strong buy stock. Intel is the largest semiconductor maker in the US by revenue. The historic chip powerhouse topped our Q4 estimates in late January, driven by data center and PC demand. Intel also upped its guidance and said that it's set to benefit from the ongoing expansion of cloud computing and big data and more. So let's dive into Intel. As most of you know, Intel is a chip giant. It kind of helped start the space in the United States. So we don't need to really get into any more of that. They're expected to, as we mentioned, cloud computing, big data, all of those big buzzwords are expected to help for Intel. So at the moment, we're gonna take then a look at what's going on here with Intel. So I can't tell. I don't think you can see my screen now at the moment. So we're gonna see what's going on here with Intel. As I mentioned, I'm now just gonna be kind of staring down. You can't see my screen, but Intel stock at the moment is trading at a discount compared to the electronic semiconductors market. It's trading at about 10.3 times forward 12-month earnings estimates, which is below the industry's average of about 13.5. And it's also trading well below its highs of about 14.8 over the last year or so. In the stock hasn't done as well as some of you might know if you're following Intel. It's trading a little bit below where its industry's been over the last 3 years. It's up about 34% compared to its industry's 41% jump. And then obviously it has not been able to overcome the recent market downturn. It's down about 21% on the year. So if it continues to fall, it likely creates a better buying opportunity for anyone who's high on Intel. But along with that solid valuation, the company also pays a dividend, an annualized dividend of $1.32 per share for a yield of about 2.56% at the moment, which is pretty solid for a big tech company that also is in a larger growth industry like semiconductor market. And it's also well above the current 10-year U.S. Treasury yield of about 0.8% at the moment. And we should also note that the industry it rests in, which is that semiconductor market, is in the top 14% of our more than 250 Zacks industries at the moment. And it's currently a Zacks Rank number 1 by stock, as we mentioned, and has a B grade for growth. So we're going to take a look real fast. We're calling for about 2% growth for the current full fiscal year, 2020, and then another 1.2% growth that next year, all the way up to $74.3 billion. And then the bottom line, we're calling for 2% growth this year and 2% growth the next year. And then despite some market downturns, there's only been a couple downward estimate revisions in the last 7 days, while in the last 60 days, all of the revisions, besides those couple recent downturns, have been positive earnings estimate revisions, which gives it that Zacks Rank number 1 strong buy. So it went from 60 days ago, our consensus estimate for the current year was at $4.72. It's all the way up to $4.97 per share, down just 2 cents from where it was a week ago. And it went from $4.72 for fiscal 2021 all the way up to $5.08. So that positive earning estimate revision looks really good. And Intel has also crushed our bottom line estimates in the trailing 3 quarters. It beat by about 23% last quarter and 15% the quarter before that. So obviously the market's going crazy. People might want to stay away from any stocks at the moment, but Intel does pay a dividend. It's a giant company, has a lot of cash on hand. It rests in a strong industry. So if the market continues to go a little bit lower, maybe you buy Intel at even a lower price. It's trading at about $47 per share at the moment. But that does it for today's episode of Free Lunch. Make sure to also check out our new Zacks.com/promo page for a look in some of our services, portfolios, and more. Also, make sure to tune into Paper Traders, which is live at 11 a.m. on Wednesdays. Once again, I'm your host, Ben Rains, and we'll be back next time with more up-to-date market news and a new top stock pick.